The Doc's new investment option.
Lead Bullion.
Buy your ammunition from the Doc today at sdbullion.com.
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Clear signs, Eric, of Cartel capping once again here and pushing to the downside throughout the week. I'm really struck by the algo pattern Wednesday through Friday's trading, especially in the overnight hours. You really could overlap Wednesday, Thursday, Friday's Asian and London market trading on one chart. I think every day silver bottoming at 1992 exactly, and then starting to move higher just about exactly between 7:30 and 8 a.m. New York time, just prior to the Comex pits open. And we had a little bit more of a move to the upside today in silver. Silver closing in on 2050 before working down a little bit in the access market hours after the Comex close. And gold also with a bit of a move to the upside here today, breaking a bit out of that pattern for the last couple of days and crossing 1250 after, 4, 5, or 6 capping attempts, reaching up through 1255 and then consolidating, closing the day above 1250 here, Eric. So especially in gold, positive action to close the day as well as the week here on Friday.
Indeed it is, and it suggests that the cartel is signaling to folks, hey, you know, the managed retreat mode is still operative and we haven't gone away, so don't get any bright ideas. The positive side about all of this, though, is that this week it was reported that the Comex gold inventories had dipped below 400 metric tons, and this is the lowest it's been in a couple of years. I mean, roll back the pages of history to last year and further back in time, and we averaged pretty easily with a couple of spikes above 3,000 metric tons of gold inventory in the Comex vault. We're witnessing part of what is establishing this long sweep bottom that started with the 28th of June, and we keep bouncing off of the bottom lows, and every time there's a period where there's a lot more pushing by the cartel to hope to inspire the copycat selling that hedge funds and other momentum traders do, we retest the lows and whatnot, but we've already bounced off of the lows that we saw in December, and we're trying to move forward. And every time we make movement on a chart that seems positive, i.e., you know, roll back to last Tuesday, for example, it actually looked pretty darn bullish as the year was beginning to unfold, and people would look at the metals, and then all of a sudden the cartel steps up and Wednesday and Thursday and beats the heck out of the metals. And here we are now, Friday bouncing higher. There's really no particular impetus for this move other than the fact that the cartel's probably not pushing down as much as it had before. And, you know, for people who are skeptical of the degree to which the gold and silver markets are managed and sometimes massively manipulated, all of this talk probably sounds crazy, but the fact is that it's very well documented at this stage that, you know, there is a gold cartel. Historically, when it comes to the 1960s and 70s, it was all open and out in the public with the London gold pool and all of that stuff. And then when you look at other aspects of different markets, with the management of interest rates and bonds and direct participation in the marketplace with the Federal Reserve and the Treasury acting, I mean, I just kind of am astounded that at this late stage in the game and after such an enormous amount of data and public statements that are made by policy officials, that there's any skepticism whatsoever that these markets are managed. But so it is. You know, the mainstream won't touch it because it's not in their best interest to report on this stuff. All one has to do is look at the last 72 hours, as Doc was saying, and you can see the high degree of high-frequency trading, managing the prices, and then when there's the normal hours where people are more active in London, going into the PM fix, which is very important because that determines the fixing price at the end of the day for transactions that occur between mining companies selling their product to refiners and China making deals for offtake, and all of the various ways in which the London bullion market represents the most center point of reference for we're seeing today, the Comex speculators probably taking long positions, and maybe we might be able to see that in the Commitment of Traders report next Tuesday. But I mean, it's just suggestive that they recognize that the cartel can't push further to a bottom, and they're speculating and moving the price higher in both gold and silver. And that has everything to do with the fact that in order to operate a futures trading market, you have to at least have some ability to back the trades with the ability to deliver physical. Now, Comex is certainly not as important as a physical market as the London Bullion market, but nevertheless, you can't operate a futures exchange if you have nothing in inventory. And they've just obliterated the inventory over the course of the year. I mean, we've gone from peaks of over 3,000 tons to under 400 metric tons of gold.
It's really quite astounding.
It's shocking. I need to go over historical numbers because I don't think there's ever been that degree of a percentage decline in such a short period of time. That'd be, if anyone has looked at those numbers, please send it our way. We'd love to talk about it and publish it. But I guess bottom line is that this continues to be yet one more reoccurring data point that suggests that the bottom is in and that the cartel has the great difficulty of trying to orchestrate prices that dip below these sticky areas in both gold and silver.
And speaking of the London fix, probably the biggest news affecting the metals in the markets this week was the news Reuters reported this morning that Deutsche Bank is going to quit PM price setting, or basically the London fix. They're going to vacate their chair and try to sell it. Now there's 5 banks involved in setting the daily AM in London gold fixes in London. And there's only 3 involved in silver, and Deutsche Bank is one of them. The Bank of Nova Scotia and HSBC are the other 2. So 1/3 of the banks involved in the daily price setting in the London fix in silver is going to be quitting that, and they're looking to sell their seat. We can think of a couple U.S. banks that are probably salivating at the opportunity to.
Here comes J.P. Morgan.
have a 33% say in the silver price setting and a 20% say in the daily gold price setting. The other thing is that reportedly several of the other banks involved in Bafin, the German regulator, its investigation into precious metals manipulation, are also considering exiting their involvement in the London fix. So it's pretty big news, and it's pretty amazing that it's only been a couple of weeks here, and Bafin has Deutsche Bank quitting the game. Took the CFTC 5 years the 3rd time to find that silver was not manipulated. Nothing was being done here in the U.S. So it appears that the German regulators are slightly more proficient than here in the U.S., Eric.
Well, yeah, and we had a report too as well earlier in the week about precious metals market being more manipulated and worse than Libor and its scandals. So the Europeans are taking this a little bit more seriously, well, a lot more seriously than our friends like Bart Chiltern and the rest of the gang, Gary Geitzner and all that over at Commodity Futures Trading Commission.
And it may be coincidental, but I find it quite interesting that the whole story about Bafin, the German regulator's investigation, breaks and starts to become news, and the banks are investigated shortly after the Fed returns only half of the amount of German gold reserves that they were scheduled to for 2013 in their recast bars. So could be coincidental, but the timing is pretty suspect. That
I'd go further. I mean, basically it's clear that Germany's pissed off, and they are less willing to play the games of the Anglo-American price suppression scheme and management of the Anglo-American financial services edifice that is the bread and butter of our economies, whereas Germany is a little bit less dependent on financial services and more traditionally focused on an industrial model for their economic livelihood. And so that shapes their geopolitical relationships with other countries. And the fact that they've been snubbed by the Treasury and the Federal Reserve when it comes to their gold makes them less inclined to play the games that are associated with the gold cartel and its objectives and pursuant to the needs of managing financial markets around the world. The correlation here certainly does suggest causation, and when you map that in the context of what nations would do geopolitically, it's no surprise. So I think it's not an accident, and it's kind of interesting too. And I remember back in 2004, if memory serves correctly, the Rothschilds bailed out of the gold fixing market in London Bullion Exchange, and they actually founded the thing because they could tell that the writing was on the wall, that there was going to be a lot more friction and visibility when it came to the ongoing price management of the West and its gold operations.
Right, I believe that Rothschild sold their seat in the London Exchange to Barclays back in 2004, so it's been about a decade ago.
It'll be interesting to see if anybody wants to buy the seed from Deutsche Bank because, it's basically an invitation to be part of lawsuits or maybe just fines or whatever. I mean, any bank joining now would presumably not get any flack for previous activities, but going forward, if an investigation takes a year or two or what have you, they'll still be a party to the process.
Exactly. I wanted to give listeners a quick update on the retail supply situation and the wholesale level here in the United States, both in gold and silver. And the United States Mint has begun shipping just the end of the week here their first allocations. Again, we reported last week that they let the wholesalers know that the allocations were going to be about 33% of the size that they are anticipating from the end of last year's the weekly allocations. We haven't seen the premiums move too much yet. We've seen the wholesalers that have been pre-selling are already sold out through about a month through their allocations. And some of the ones who hadn't started until they actually got their numbers, probably thankful for that now. They're only about a week or two out. So haven't seen too much change in the Silver Eagles. Canadian Mint continues their allocation program, but supply across the wholesalers is pretty much live within a week's delivery there on the silver side, and the same thing really for generic rounds and bars, live to about a week's delay, so not too much of a shortage issue ongoing right now. The interesting thing on the U.S. Mint side is the gold products. Actually, they've been pushing the authorized dealers to purchase backdated products. So it's now 2014. They're rolling out 2014 Gold Eagles, both the 1 ounce. They also have the half ounce, quarter ounce, and 10th ounce coins. But they're not allowing the dealers the wholesale authorized dealers to specify what year. So when they put in their order for Eagles, they're sending them all these backdated Eagle coins. So several of the wholesalers have actually are refusing to order from the Mint until they stop the shenanigans and send them the 14 dates that they're ordering. So it's kind of an interesting situation that's popped up here for whatever reason, whether the Mint's trying to decided they need to get rid of some of the old backdated stuff that back in 2010, 11, and 12 they'd overproduced, while they catch up and maybe make a supply of this year's. Who knows the bureaucrat who made the decision, but the current year products are being pretty hard to obtain in the U.S. here, as the Mint's not letting the wholesalers specify the year, and if they order, they're kind of sending them a smorgasbord of dates.
Has that been happening for just the 1 ounce coins, or as well for fractional?
It's actually more for the fractional coins.
Really?
Really everything, but more for the fractional coins.
Huh. Typically those coins tend to have strong demand, and if anything, they're in short supply. So what happened there? I mean, in
the past year they have stopped production on several of the fractional coins for quite a while. So I'm not really quite sure what their motivation or rationale is with that, but.
That's weird. Well, I mean, it's probably not a story that will have any significant market intelligence value per se, but definitely weird.
Not too much news this week. The one other big news we wanted to let our listeners be aware of, you've probably already seen on the site, but SD Bullion and Silver Doctors is launching a new SDBullion.com website this weekend, along with ammunition sales. So it's been about 7 months in the process, in the works, so we're quite excited about launching into the ammunition market and providing preppers and stackers the opportunity to invest in some lead and purchase some lead to protect their families and their stack and sharpen their skills. So
diversify. You need to have some of that precious lead.
Exactly. Regular SD readers will be familiar with AGX IIK, one of the more popular bloggers on the site, and he's already trying to contact us to find out whether we'll trade in some of his fizz for the lead metal. So we'll accommodate him. So we're pretty excited about that. As I said, it's a long time coming. We're finally ready to launch and go live. So if you want to check it out, the sales are going to be on SD Bullion under the Lead Bullion category. So check out the ammo while you can get it. A lot of the stuff is still pretty tightly rationed, even quite a bit more so than the gold and silver, especially like the 9mm 22 ammo, just in really tight supply. A couple of the larger ammo wholesalers hasn't even seen any 9mm inventory in 3 to 4 months. So the government's just buying it directly from the manufacturers, and they're not even shipping any to the wholesale distributors for retail consumption. So the ammo market really is obviously purchasers from a retail perspective. You can see it as well, but it's pretty shocking when 2 or 3 largest suppliers in the entire United States haven't seen certain calibers in months. It's quite amazing.
Yeah,
and we're not talking like rare, unique calibers, like 9mm.
Yeah, well, even the rare calibers are having difficulty making their way to market because the manufacturers are focusing on the stuff that is in extreme demand and higher profit margins. So
exactly, they're just not making it.
Yeah, so it's tough. I mean, any time you get something unusual and you post on that site once it launches, people will probably be scooping it up faster than you can keep it on the shelf.
Yeah, we've been building some inventory up for the past 2 or 3 months of buying all of our weekly allocations from all the suppliers, so we'll see how long until we sell out of that. But so you can check it out over at SD Bullion, the lead bullion and ammunition sales, as well as obviously the gold and silver sales, and with the new website as well. So we're going to wrap things up there. We've got a lot of work to do to roll out the new website tonight, so you guys can check it out. And once again, for Eric Dubin and the Doc, thanks for tuning in to the SD Weekly Metals and Markets Wrap.
The Doc's new investment option.
Lead Bullion.
Buy your ammunition from the Doc today at sdbullion.com.